now we are. Do we see it on Facebook or do we see it here? Or how do we do this?
I don't know.
Okay. Um,
So are we live? I don't see it.
we are.
Oh, here it is. We are live.
Let's see.
There we go.
It's actually pretty cool.
There we go.
Okay. All right. Well, guys, first of all, thank you so much for. Can you stop that?
Yeah. There we
Thanks, Javier. So this is Ainhoa Garcia with Realty of Chicago.
go. And Javier Garcia with the Federal Savings Bank.
Thank you guys for tuning in. We have had a really busy day with a couple of closings and some of our clients needing some things prior to weekend showings and some questions in their journal reviews before 5 p.m. So we're a little bit behind our ideal schedule, which was 5 p.m. We
I was on
are.
Pacific Standard Time, so we're right on time, okay?
Well, yeah, that might be the case then. No, but today, so we want to do a little announcement as well. Today will be the first episode. We are going to have a home buyer boot camp. And today we're going to touch base on how the market looks like in the Chicagoland area in this third, fourth phase of COVID-19 and how elections actually. Do we have a president yet?
I don't think so.
We might not have a president yet, but we're getting closer. So hopefully we will know very soon. But yeah, how the elections and riots and everything else that has happened in 2020, how does that affect the market in Chicago and suburbs as well? Because we do serve a lot of suburbs as well. So we have some questions that our clients and some people that did reach out on social media, they sent us some questions, and the most common one, I would say, I'll pass it to you. And this is just kind of like a chat with friends, nothing really official,
I
right?
actually came really prepared here. So one of the questions that one of our viewers actually sent us is they've heard that there's a rumor that there's limited competition when you're buying at the end of the year because fewer families are looking to buy during the holidays.
Okay, so that in 2020 and might not be the case. And that is why, let me just check. Is the audio good?
Yes.
Okay, just making sure. So generally, we have seen less inventory. That's the reality of things. But then, depending on the area, we actually have seen some increase, like in condos, especially downtown area and Lincoln Park, Lakeview. We have seen an increase on inventory.
Okay.
But generally speaking, we have low inventory for the amount of buyers. So technically, talking about competition, we face every single day a lot of multiple offer situations. In most cases, we won, but sometimes we don't. And we just have to be prepared. And I say that to our buyers or future buyers that we have to be very good prepared, very well prepared when it's time to submit an offer.
Absolutely.
Because it is so much competition.
Absolutely. So
So
talking
no
about
food
preparation,
competition.
so talking about preparation and competition, would you say that their sellers or buyers are just a little bit more motivated because it's the holidays and if they are buying during the holidays that they definitely want to make it happen? Do you feel like that maybe there's more opportunities for having a seller be more motivated to maybe make a deal work?
Yes and no. Again, 2020 is very different to other years, and we still, because the spring and summer market, we have seen it afterwards. We didn't see spring market, even though it was not very slow during COVID, we would still have sales, but we saw really the booming late August, even late July. That's when we really saw a lot of booming on the spring market. So technically, we have residual buyers and residual sellers that they are still very motivated and they want to make a deal before the end of the year.
Right.
Motivation wise, I see that if someone is hosting Thanksgiving at home with a small family, this year we cannot do big gatherings, but if you're hosting and you still show your home or you're willing to show your home in the morning to future buyers, that means you're very motivated and hopefully willing to make something work before the end of the year. So motivation wise, I think the buyers are very motivated to make a deal, and seller because of the competition, and sellers are motivated to close before the holidays and move on, especially with the economy moving things and some people losing jobs and things like that. a lot of more buyers and sellers, sorry, they might be motivated to make a deal on the
Okay.
stock.
So based off of that, would you say there's a better
This is
price
not an
potential?
interview, me.
Would you say there's a better price potential? Hey,
Price
these are our viewers'
potential?
questions, okay?
So price wise, I remember who actually asked that. So price wise, it again is case by case. In most cases, it still has up to date. We are offering, and this is really a thing, we are offering over asking in most of our offers.
Right.
So that's happening with our buyers. Now with our sellers, we are seeing a great surprise because sellers are selling it more than we even thought they were going to sell. Now moving forward and going into more winter, snow, Chicago, pet post election, not knowing if interest rates are going to change a little bit or not. We can touch base on that too. That was another question. Um, they might lose a little motivation or not lose motivation, gain motivation seller wise, and they might like to make a deal and cut a little bit for example today one of today's closing, that was, even though we sold it within 24 hours, they still got less than asking price, but it was cash and we could close in 2 weeks
Right.
or 10 days technically.
Yeah.
So that is a more secure deal, especially in this type of a scenario that these days some people unfortunately they lose their job, or their calculation for mortgage year-to-date income is a little bit now different what they thought it was going to be when they first got pre-approved.
Right.
So that's not really a safe environment at all times. Again, case by case, with if we work with you is good. But it's safer to pick a cash offer, even though it was less than what we initially wanted to get it at.
Absolutely. Cash is king. I always say take it if it's there. Question.
I do have some questions regarding mortgage.
Yes.
Okay,
Go
so
ahead.
first of all, how long does it take for a loan from start to finish? And that's my phone ringing. Who is NE? Is that
That's
president?
Nebraska. That's Nebraska. We got the new president calling us.
Right? To let us know that it's back.
So timeline for closing, right now, basically what I would say, every bank in the country is basically running two different pipelines, and that's a refinance pipeline and a purchase pipeline. So one thing that I always kind of like emphasize, obviously purchases are always a priority because families are trying to get into their home by a specific timeline. I would say as long as the clients are being proactive and working with their loan officer, getting all of their documentation up front for that pre-approval, they should still be able to look at a 21 to 30-day close time. Now, the one thing that is affecting timelines is that appraisals are delayed right now. On average, appraisals are taking anywhere between 10 to 12 days from the date of order. And it's just because they're backed up. But right now, you're still able to close on your mortgage within 30 days, as long as you're prepared.
Okay. Okay. And is it important, like, for example, I mean, I know it is important, but I just want to like share with them. This was not a question from our people, but it's important to be very close in a relationship with your loan officer and your team, financing team,
Absolutely.
when you are submitting an offer. Well, when you're submitting an offer, why? What do we need to do when we want to present a strong offer? Again, this is back to having, I'm kind of like looking at you instead of looking at the camera actually. So, but es que la luz es maravillosa.
Está
Aquí.
bien.
It's awful.
Fantástica.
So it's very, very important to actually have a close relationship with your financing team when you are submitting an offer. And this is in the same topic, like, okay, we have a multiple offer situation here. How important it is on the listing side when we actually represent the seller to get in contact with.
It's actually like really important. Like we actually had a couple of deals and transactions right now where we have an FHA buyer who's looking to buy an FHA condo. So you're having to do a little bit of extra work and verifying whether or not we could possibly get a spot approval. I'm having to do some work as well too. So it's really, really important. And this is like honestly feedback to any professional in the real estate industry.
You're not watching.
Real estate and lender, you really, really need to double team some of these offers together and just kind of second voice why your buyer is the right buyer for the property. It doesn't necessarily always have to be about loan product. I have clients who sometimes have 700, 800 credit scores that are choosing to go FHA financing because it gives them a lower down payment if they're looking to do a multi-unit investment. So there's always a time and an essence to do everything. And I always going to say it's all about the delegation. Explain why you're submitting your offer a certain way. You know, if you're looking for
Yes.
to get closing costs and there's a specific reason why you're asking for those closing costs, make
Mayra,
sure that you
Maribel.
delegate and you're letting everybody know, hey, we do have a strong buyer, they have sufficient funds, but maybe they're planning on making some renovations to that home once they actually close on it, and they want to use some of those funds for those renovations, as opposed to doing a bigger down payment and maybe going with a conventional loan offer. So it's really, really important that the lender, the real estate team, and the buyers themselves are all working cohesively so that they're putting a sound package together for the seller.
Okay. Well, first I want to say hi, Mayra.
Hi,
She did say hi
Mayra.
in the comments, and Maribel as well. And people from Spain too. Hola, Patricia. Un besito. Pero que
Patricia,
muy bien.
de
Tú no
acá
la
de
conoces.
Chicago
Tú
también,
no la
estamos aquí
conoces.
desde Chicago.
Okay. So a question on people ask, is the interest rate going to stay like this? Like, are they going to stay like this?
It's like that magic 8 ball. If I knew what rates would look like, I would be a millionaire, bazillionaire. Honestly, that's the one thing where I tell everyone that rates are just, they've actually been pretty steady throughout this year in 2020.
Maribel, one question on second home mortgages in a second.
We'll touch base on that. But rates have actually been pretty steady. I think when the whole COVID-19 situation, we saw a big influx where rates just specifically dropped. And it's been very steady. However, what goes down must come up, and what must goes up must come down, right? So right now we've seen historically low rates. I don't think I've ever locked as many home buyers as I have this year, below 3% as I have this year. So I do see interest rates rising, and that's why it's kind of important. Where I always kind of tell people, if you find the right property within your right budget and you have the money to be able to do down payment, do not wait, because essentially the difference in interest rate can be a big impact in regards to where your buying power. I had buyers last year who were unfortunate and not able to find a home that were qualified at a 4%, 3.875 interest rate, that this year were able to successfully close on their home at 2.375 to 2.5% interest rates. And because of that rate drop, they were actually able to buy significantly more home, almost a $50,000 to $60,000 increase in buying power because of that fluctuation in interest rates. So rates are really low. They're the lowest that they have been. They will stay low. You're not going to see a fluctuation of like a 4% interest rate. They may start creeping a little bit closer towards that 3%, 3.25. But I think overall, it's going to be a very, very steady state here for the next 12 months for sure.
Yeah, based on, I mean, on some research and some of the information that InfoSparks and the stats in the city, we have seen the actual increase in home values, at least the median price, I mean, the median increase is actually 6.9% median overall Chicago area. So technically, Chicago, that was a little bit behind in comparison with nationwide,
Right.
it actually has gone up in home values, and it was not happening in the last few years.
And it's going to happen even more, and I can almost guarantee that the stats are going to show a higher increase once the fourth quarter is wrapped up and the first quarter for next year. Because, like you said earlier, almost every single one of our buyers are going out there and they're submitting an offer higher than list price. So I think
do want
those
to say
numbers are
something
definitely
about
going to
that.
start deviating a little bit more too.
Yes. I do want to say something about that because, and this is, I don't know why I'm maybe complaining here or saying it, appraisers or appraisals. That's another thing. Like, as listing agent, when we list, or buyer's agent too, when you list a property, even though you want to compete and you want to send a very strong offer, not just the price, also obviously the terms of the contract, but the price, sometimes if they have price to sell or they have price accordingly, then we're going to have an issue with the appraisal if we compete and we put a higher price to
Right.
win the bid.
Mhm.
It's not just winning the bid. We need to make sure and do our homework as agents as well to make sure that we are not signing up for failure.
Absolutely.
Because then we have an issue with the appraisal. Bank is not going to let us borrow more than what the bank says the home is worth. And then we have an issue, appeals, and sellers upset, buyers upset. There's money on the table.
Right.
Cancellations do happen. And
yeah, the comparables are always there, and that's why I always kind of tell everyone, I'm like, it doesn't necessarily mean, I always ask, are the comps there? Because sometimes the biggest question that I have, 3% or a 4% closing cost credit, let's make sure that the property is going to appraise.
Correct.
Because otherwise, we've wasted money on an inspection, we've wasted money on an appraisal, to later on have to make a tough decision on an appraisal not coming in correctly. So I definitely suggest everyone should be doing comparables before they submit their offer, just to make sure that they're actually submitting an offer that's actually going to get to the table.
Okay, so before we wrap up with some highlights
Mhm.
of this conversation and what it is that we are going to be doing. Oh my God, this is so cool! It's like
No,
subtitling.
yeah, it is. This is amazing.
That is cool.
This is
Okay,
our first time
Maribel,
doing this, so if we look excited.
Maribel, let's respond Maribel question.
Sure.
Maribel, te queremos. Mwah. Can you touch base on the second home mortgages?
On the second home mortgages,
Yes.
so if it's a second home, technically the rule of thumb is that the property has to be located within 100 miles of your primary residence.
Okay.
The reason for that is because a second home will allow you to purchase a home with only 10% down. Okay.
If you are past 100 miles.
If you're past 100 miles, and that's the little caveat that a lot of people sometimes tend to circumvent, or they think that the property is located, it's an hour and a half away, but if it doesn't hit that 100-mile mark, a lot of the times that's where you can have a little bit of discrepancy in whether it's considered a second home. But a second home is technically going to be a property that you're going to occupy partially for the year, but not going to be your primary residence, and that's why they allow.
Is that an investment property then?
No,
No.
it's a second home, so that's why
Second.
they allow you to do it at the 10% down.
Okay. If it was an investment home, it would be at least 20.
If it's an investment home, it's 20% for a single family or a condo or a townhouse. If it's a multi-unit, they would have to do 25% down.
Okay. Okay. We have another question from our girl. Oh, Stephanie Legorita. Stephanie, un beso. Have you seen more inventory on multi-unit homes since they allow tenants to skip rents? No.
God. And it's like, so like I'm actually a big culprit of this, because I am a believer that your first purchase should be a multi-unit property, especially if you're under the age of 35. It's a great way for you to build your real estate portfolio. Unfortunately, though, the inventory for multi-units is just currently not there. There's a big plethora of inventory for multi-units that require rehab work, which is going to require some more money and some more wiggle room of like having some funds to be able to rehabilitate the property and things like that. But at least
And the
for me,
reserves also
and
too,
the reserves.
Right?
Well, reserves is just more of something of an additional requirement for qualification, where we are asking for them to not only have their down payment, but also have 3 months reserves for the monthly payment of the property as well too, because it's a multi-unit. And necessarily, we don't always need the reserves if they're able to qualify without using the rental. It's when we're using the rental income to help them qualify for the mortgage that we have to hit them with the reserves requirement as well.
Now I have a question.
Mhm.
So, for example, we have a multi-unit that we want to sell.
Correct.
And does it interfere or change anything on the potential buyer financing if my tenants have stopped paying, if they're not paying? Does it affect the new buyer?
Well, it's going to affect the new buyer when they become a landlord of those non-paying tenants.
But they can qualify. It doesn't
Yeah,
interfere
that
in the
doesn't-
qualification.
That does
As
not
long as
fall
they
into
deal-
qualification. The only part that falls into qualification, which I actually just had recently happen on a property, is that all the units were leased out and not month to month. So
Okay.
so anytime you're buying a property with a primary occupancy loan, which means you're going to occupy it, you're going to sign an occupancy affidavit that states that you're going to occupy that home within 60 days of the day of the note
For at least
12 months. So that's where it can become a little bit tricky. Like in this particular situation, we had a 3-unit, all 3 units were leased, and the leases were going to be extended for about 5 or 6 months after the day of closing. So technically they weren't going to be able to occupy the property. We ended up having to cancel the contract.
Did you cancel it?
Yeah, we did.
I know that one.
They did not want to wait.
Whoa!
They did not want to wait, and they said we're going to
That
cancel.
was not my
We're looking
client.
For someone for another property, but those things happen. So that's why like it's really important whenever we are working with a buyer who's looking for a multi-unit, they need to have at least one of those units
Hi,
that's going
Jonathan.
to be available for them to be to occupy for primary residence.
Okay, we have another question. Actually, it's from a friend of mine, Danielle Luna. Hi, Danielle. How is the condo market as a seller in Chicago up to now and going forward after the election? Very good question. Condo market has increased, meaning that inventory, depending on the area, and it's case by case, but in most areas, we actually have seen an increase on inventory. What does that mean? Well, there's a lot of buyers out there, but the inventory on, for example, homes or single family houses or multi units and in the suburbs has increased the demand, but the demand in Chicagoland for condos might not be that high for now the inventory coming up. Did that make sense?
Wait, can you repeat that again?
The whole thing?
The whole thing?
I'm saying that, for example, I mean, not for example, some areas in Chicago, and I know which one you're talking about, Daniel, but some areas in Chicago, the inventory for condos actually has gone up because some sellers are leaving. They don't no longer need to be downtown. They don't, no longer need to be in the loop for work because they can work remotely. So they want to get some
I
more
have an
space.
amazing theory on
Buy
that, actually.
what?
I have an amazing theory on why these condos are going on the market, and specifically a certain type of condo. If you're looking at it when you're like running the statistics and the specifics, a lot of those condos that are being sold right now are coming into the market are condos in the 200,000 and under price point.
Mhm,
So if you think about it, the last bubble that we had in 2008,
mhm,
which is when a lot of those condos were foreclosed and were being liquidated essentially.
mhm.
So if you actually look at the initial acquisition note for some of those units that were purchased 10 years ago, 12
Was
years
low.
ago, it's definitely raised a significant amount of value, almost 100% fold in certain cases. My brother actually bought a condo in Rogers Park back, I want to say it was in 2009, and he bought it for 66,000, and we just refinanced it and got an appraisal for 165,000.
100,000 more.
So it's 100,000 more. So that's what's happening, is that a lot of people who did buy based off of the last recession, the last bubble, are seeing that the equity that they're sitting on right now, and this is the perfect time to do an upgrade purchase.
Because they
Technically,
can take the equity or just sell and the
Absolutely.
proceeds and
Right.
buy a home where they get a backyard and more space for their money.
and because they usually purchase that condo as entry level millennial buyers, kind of like what we did with Hector Herrera and Francesca Herrera.
Why are you saying the names?
Oh, I'm sorry, because he's my best friend. He's like my third best friend. But anyways, he made an amazing acquisition with a condo that we're actually going to be closing and selling, and they bought
Maribel, te queremos.
their beautiful home in Arlington Heights. So yeah, that's I
Sí,
think that's what's
dile la
happening.
dirección también, ya que te pones.
Hector Herrera. But no, like I think that's the thing that a lot of people are realizing is that they do have equity, and that's the one thing that I really tell people, because sometimes this will happen as well too. You may be in a position where you do have your home and you do have a lot of equity, but maybe you got a lot of debt,
Mhm.
right? So right now it's actually a good opportunity is for those families to really take a look at how much equity do they have? Do they have the ability to sell their home, eliminate all their debt, and essentially start from scratch with no debt, and use a first-time home buyer program to buy a home with a low down payment entry as well too, with interest rates being as low as possible.
So generally, it's a great time to sell if you price accordingly and you have a marketing
Absolutely.
plan, obviously. But the response to make it short to certain condos or certain areas with condos is that we have seen an increase in the inventory. Then the buyers have more choices to choose from and less multiple offer situations in those condos.
Absolutely.
Perfect. Let me see. You think you can sell my condo in 1 month? Yes, sir. We'll talk about that. A ver, ¿quién más? Si tenemos alguna pregunta. Si hay alguien que quiera hacer una pregunta en español, we'll talk in Spanish too. That's not a problem. And before we wrapped up, right now, I wanted to just kind of like say a couple of highlights based on what 2020 has been the year for history that we can all remember. I mean, I'm 30, but I guess, well, you're also very, very young.
I'm 36, by the way.
You're turning 37.
I'm a millennial.
You're not. But so the highlights of this little chat as friends who just felt like, hey, you know what? Let's go in, answer some questions. A lot of people reach out to us and in social media, especially, or past clients or current clients, and they have questions about how the market looks like in Chicago. Again, highlights is case by case as well because we see overall an increase in value, but we also know low inventory generally condo scenario is actually raising in inventory. But again, it also depends on price range and area. Some condos are selling like hot bread as well, and they're still going into multiple offer situations. So no panic here. But if you are in the market thinking of buying or selling, the best thing you can do is getting together with your local expert and talk about your options, what it is that I am sitting on money wise, financing, or what options I might have in order to purchase my next acquisition. My English sometimes is just brilliant.
It's amazing.
Yes, another highlight, and this probably has nothing to do with real estate, is just to stay very positive when it comes to this COVID-19 situation, and prevention is very, very important. But at the same time, don't be afraid. The world still goes on, and we have to keep it moving. Real estate is a very, very stable market right now in Chicago, so don't be afraid of making a purchase or a sale. It's actually a very good time for both.
And there's always a benefit to everything. I
Taxes.
on the finance side, I would say COVID-19 has affected a lot of people in a negative way, but it's also affected a lot of people in a positive way because I've seen some clients who are in certain fields of work, like truckers, for instance, or people in logistics, or nurses and doctors. They're working more hours than they ever have before and things
Yeah.
like that. But most importantly, and I think this was the whole point of us going on this live today,
Maribel, I always
all
have
right,
questions.
is what is the biggest benefit of buying at the end of the year? It's specifically here in Illinois. I preach about this for 20 years. And a lot of the times, whenever we're heading into this type of market, usually the buyers that I talk to or people who are interested in buying, they want to hold off until after the holidays. Or a lot of the times we wait until January comes around and we do the call and they're like, well, I want to wait until my IRS refund is received. In Illinois, taxes are paid in arrears. What does that mean? That means the taxes for this year are paid next year. What does that mean to you as a home buyer? Well, that means that from January 1st through the day of closing, you're going to receive what's called a prorated tax credit. So let's just say that the property taxes for the home are $6,000 for the year. Well, let's say that you're able to get your pre-qualified, pre-approved, and let's say that you close in December 23rd, 2 days before Christmas. You're going to receive a full 12 months worth of property tax credits that can be applied towards your down payment, can be applied towards your closing costs, can be applied towards your prepaid items. So for home buyers who have maybe not been successful with getting a contract because maybe they needed seller credits, use a prorated tax credit as a way to help you cover some of your closing costs. So make sure to kind of stay active. And I always say it's not just towards the end of the year. This is technically, as long as you have a contract where you close before that March 1st installment of the Cook County taxes are due, you could get anywhere between 12, 13, maybe even 14 months of property tax credit to go towards your down payment or your closing costs. So this is a huge benefit that not a lot of other states have. And it's something that Illinoisans should definitely take advantage of because I would say 80% of the counties in Illinois all have taxes paid in arrears. So you will receive a significant tax credit by closing at the end of the year or beginning of the year before March 1st.
Diana, te queremos maravillosa, muy guapa, preciosa. Maribel, tenemos una pregunta. Maribel Quiñones. Thank you so much for your question, my dear. Regarding clients who went into loan forbearance because of COVID, but are now on track with payment, can they get a loan for a second home property?
If they are back to current and you've repaid that forbearance agreement, you will be eligible to buy immediately. Now, the part where it gets tricky is that a lot of these mortgage companies ended up offering this forbearance agreement where they took a lump sum portion that wasn't paid and added it as a second lien onto your title. In most cases, if that is the situation, we will have to wait until you have a 12-month current payment history to be able to apply for a new mortgage. So if you took care of that debt and paid it all in full, and we can document that, then you're able to go ahead and proceed. But if you did the latter, where they did a modification and added that debt towards the end of the period for your mortgage, then in that particular case, you will have to wait 12 months of a consistent payment history before you can apply again for a home.
Okay. I have two more questions.
Sure.
First question: what is the minimum credit score required? Obviously, the best credit you have, the best product you're gonna get in financing, and the best scenario it is. but what is the minimum that we need in order to get a loan?
620 credit score is the bare minimum that we need at our bank in order for us to be able to do financing.
620.
620 credit score.
Okay.
That was something that was updated after COVID-19. I think we were able to go down to a 580 credit score at one point, but for right now, we're back to 620 credit scores. I don't know if that will ever change that policy where those scores get reduced once again.
Mhm.
But as of right now, 620 credit score can get you financing and get you in the door to get your own home.
Okay. And second mortgage info. Like what, like, Stephanie, can you elaborate a little bit?
If it's a second mortgage info, if you're talking about like a home equity line of credit or something like that, the one thing that I always tell people first thing, if you just purchased your home in the most recent like 3 or 4 years, you don't have enough equity in your home to be able to do a home equity line of credit unless you bought your property, rehabbed it, or did significant amount of work where it's going to appreciate in value, right? If we're looking at an increase of 6.9% in appreciation,
Mhm.
if you take into that account, you're not going to have enough equity if you did a minimum down payment loan to be able to take out. In most cases, in order for you to take out a home equity line of credit, you cannot exceed 90% combined loan to value. So what does that mean? That means you have a loan to value, which is your first mortgage, and then you have a combined loan to value, which is both mortgages and the value of the home. So you can never exceed 90% whenever you're doing something like that.
Okay. Let me see if I have any other question. I think we respond. I think we have responded them all.
Nice.
Okay. If you guys have any other question, please send it. We will take care of it, and we can call you and let you guys know as well. And just to kind of wrap it up, how are we looking into spring, market wise, rates wise? Do you have any input on that?
I think the spring market is definitely
You
going
don't
to
think
be.
we'll go really high? You already mentioned that.
Yeah, I don't think the interest rates are going to go high. I think that rates are going to be very stable, especially after the year that we've had. I don't think that we're going to see too much of a fluctuation with the
Mhm.
rates.
Yeah.
However, I do see, because of the activity that I'm seeing right now, even like November, we're seeing record months for applications, properties still going on the market and things like that. I do think it's going to be similar to what happened this year, which was a very hot start to the year. Because it's also something
We
that
do
a lot of
anticipate
people
a
forgot.
very strong winter market.
Yeah, because a lot of people forget that last year's winter market was actually really strong as well
It was.
too, because of a lack of inventory. So we've been dealing with the
Was.
lack of inventory. And when I say lack of inventory, I have to correct myself because there's been more sales than ever before. So it's not a lack of inventory. It's just that the inventory is not staying on the shelf long enough.
Yes.
You know, there's so many buyers, rates going below 3% have
Yes, sales and
motivated so many
activity is
people
there.
to do it. So that's what's caused it. So I think that we're going to have a fast and furious type of start to 2021, where we're going to see people like immediately right out the gate try to still take advantage while the rates are low and try to take advantage of whatever credits they possibly can.
Okay, we have one more question. Hi, Erika. Thank you for your question. Any information on VA loans? She has a friend that is looking to start the process in California. Well, the Federal Savings Bank in Javier serves actually California, all 50 states, but
Right
he
there, little
actually
plug, but largest veteran-owned bank in the country. No, for VA is honestly one of the best loan vehicles in the country. It is the only program that you could buy 100% financing, no down payment, no mortgage insurance, no monthly mortgage insurance, and if you have a service-related disability, no funding fee either. The rules are actually very similar to FHA, but a little bit more lenient in regards to allowing you to go up to a 55% debt to income ratio. So there is a huge opportunity because the fact that there's no mortgage insurance, your veterans automatically easily get about $30,000 to $40,000 more buying power than your standard civilian. So it is a great lending product. And Erica, send them my way. I'd be more than happy to help you
Erica,
out.
she already said she will send it over.
Nice.
Okay. I wanted to touch base on one more thing. I know it's like a lot of information and we are kind of like extending our time as well. But one of the couple things I want to leave us with. First one, because we have lower inventory or less time on the shelf, we need to, and we're competing with other offers, make sure you're fully prepared when it comes to submitting your offer. Consult with your expert and your team. Financing and realtor has a team, and prepare your strongest offer. And be ready when that time comes with already your inspection, your who is going to be your attorney. Get ready, be prepared for that. Okay, so that way you're ready to go. Because as we said, time is the killer of all deals in real estate. Period. But we want to make sure that you are fully prepared when it comes to submitting your offer, and obviously make a competitive offer. And also the other thing that I wanted to mention, it is a great time. A lot of people, this is a very basic question that we get. It's like, is it a good time to buy in the wintertime period? And it is totally. And also not just because the interest rate is low and all of these things that we already touched base on. I also want to say that it's a very good time to purchase a property in the winter because of the inspection time and the inspection period of time. The inspection of the property. My goodness, I need some water actually. I'm overheated here. But the time when you actually perform an inspection in the wintertime, because of the weather conditions, because you will know, as we mentioned before, insulation. If the property has
Yeah.
not been properly insulated, that attic, or if the snow stays on the roof, and like you need to know certain things, and it's actually a really good time to do an inspection. Also, when there are heavy rains, or you want to know if there is water intrusion, or if the furnace is fully operational and is working properly. Same thing, with anything, pipes burst, a lot of different details that they do happen in an inspection. It's really great time to do in the wintertime. So if the home is ready for a winter month. Okay? So that was one thing. And we just gonna leave it here. More questions? I hope not. Hi Isidro, ¿cómo estás? ¿Cómo van las cosas por Ohio? Un besito. Hi Ed. Say hi to Donna and the family. We love you. And you're coming late, by the way. You're coming late, so you have to watch. So we are gonna do a boot camp, home buyer boot camp. Today's the first episode, which we're just chatting and touching base on how the market looks like and all the questions that you guys had initially. And now we're gonna have, for the next 4 weeks, we are gonna have a session. Keep an eye out for flyers, but it's gonna be. Why are you looking at me?
It's a boot camp, so I think I might just pull out my ROTC uniform out just for these.
Well,
Maybe.
boot camp, I call it boot camp just because it just sounds great, and it sounds like powerful, and it sounds like we are gonna get great information and great questions and engagement. So that's why it's called boot camp. And it's just because, you know me, you're very passionate about everything.
So passionate. So passionate.
Shut up. So, yeah, we're gonna do a boot camp. Okay. A boot camp. Next session, it is next week, Tuesday, and we're gonna have actually an inspector with us. So, well, remotely. Javier and I work every day together. We get tested. We got tested yesterday, and we obviously can have our mask off, but we will have an inspector next week joining us. And actually, we're going to go over all the questions that we need to ask our inspectors when we are on site, and how to prepare a home for an inspection when you're on the seller side, and what to look for when you are a buyer. Okay, so that's going to be next week, Tuesday. Please keep an eye out. And I don't know if you're going to be here. We'll see.
Isn't she so passionate?
Que te calles. Bueno, gracias. Thank you so much. This was very, very successful. And we are really happy that we got to answer some of your questions. And thank you for watching. Enjoy your day or night. And Erika, buenas horas. Míralo.
Hey, there you go, Eric.
Míralo, el que
Te
llega.
mando mucho, mucho, mucho amor. Now? Jesus.
Well, I hope you shared the video then afterwards. Yes. So everyone stays positive, healthy. Prevention is very, very important. We have to keep our families, and stay positive. And hopefully, we have a president yet.
No.
Man, we don't have a president yet.
I voted for Kanye, so he's not winning.
He wasn't part of it, huh?
It's a joke.
I don't vote. I'm kidding. I know he wasn't.
Well, you can't vote. That's the only reason why.
Who says who?
You can't vote right now, right? Can we vote?
You can vote.
Are you the reason why we're having this recount?
Yeah.
Oh my goodness. Blame her.
I'll be ready to vote next time. Okay, guys. Well, we hit 40 minutes now, and we are so thankful for you and everyone that is watching. Thank you for your questions. We'll see you next week.
Thank you.
No hablamos nada.
Yeah. That's true.